Make better money choices. Choose a bank that takes your money seriously. Business Watch is brought to you by Nedbank.
Right. Good afternoon, Eswatini. It's 2 p.m. Central African time, and you are locked into Nedbank Business Watch, where money talks, markets move, and business never sleeps. I'm Sifiso Ngumalo. I'll be guiding you through today's top business stories, breaking market insights, as well as economic forecasts that shape the way we trade, invest, and the way that we grow likewise. Here's what's on the agenda this hour. 5 million emalangeni disbursed under the Agriculture Development Fund. The PS from the Ministry of Agriculture, Sydney Simelane, is going to break it all down. And then Eswatini goes global. 9 artisans return from India's Surajkund Mela Trade Fair with profits in hand. Zodwa Vilagati and Dumisani Mnisi will weigh in. Beef industry blues. Local abattoirs are slaughtering less due to supply shortages. What is the fix? Our business journalist Nelson Ndlangamandla goes in depth with Sydney Simelane from the Ministry of Agriculture. And then Forex Made Easy. Nedbank's Toba Gametse tells us how businesses can navigate cross-border transactions seamlessly through their new feature on their Nedbank Africa Money app, as well as their online feature. And then we will look at the markets at a glance. Economist Sanele Sibia is in our studios, is going to dissect the central bank's monthly statistical release, revealing key trends in credit growth, liquidity, as well as reserves. And of course, market analysis. Nozibusiso Dembe will decode today's indices and what they mean for your investments. Stay with us. This is the business world that never stands still, and neither do we. Let's get started.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Welcome back. About 5 million emalangeni has already been disbursed by the Ministry of Agriculture under the Agriculture Development Fund. This was shared by the Principal Secretary, Sydney Simelane. The 53 million emalangeni fund was launched in the year 2023, aiming to address financing gaps in the agricultural sector and to support farmers and agribusiness.
I can give you rough figures. We have allocated loans to about 10 farmers, and those farmers have been allocated a sum of about 5 million emalangeni. Now, this is what I would like us to understand. The disbursement of the funds is done at intervals. So the ones that we've allocated now, we want to follow them and see the successes that they're making. Meanwhile, we are receiving other applications. Yesterday, we had a board meeting where we were looking at the activities of the fund, and I can tell you that we have already received 17 applications that come after the 10 that I was talking about. And these 17 applications, when we look at the amount of money that they require, it amounts to about 17 million emalangeni. So we are getting to a position now where we realize that we need more money to assist Eswatini on this. But what is going to limit us clearly is the amount of money that we have. Having said that, I must mention that one of the strategies that the fund has, it is fundraising. Very, very important, because we want to make sure that we have enough funds to support as many Eswatini as possible. So we will soon be launching our strategy on fundraising. It is very important. Resource mobilization is key when you are dealing with a fund of this nature.
Each of 9 artisans who attended the Suraj Kund Mela Trade Fair in India have made just above 3,000 emalangeni. This was shared by the Principal Handicraft Officer, Zodwa Vilagati, when giving a brief of how local handicraft businesses performed in the trade fair in India, which has been ongoing since the 7th of this month. The artisans were supported by the High Commission of India.
9 artisans were participating in the India Trade Fair, and different handcraft products were showcased, and they were a marvel. They were a head turner because everyone was flocking into a Eswatini stall. Opportunities are there, but the biggest challenge is a language barrier. They come to our stall to communicate or engage on business opportunities, but the biggest challenge is that everyone is speaking his or her language. We can't get to the common goal of doing business, but when we get there, the products are making a hit. Different countries from around the globe converge there to this trade fair, and everyone is speaking his or her language. So we are able to engage with those from South Africa, but those from the other continents we are unable, because everyone is speaking French language, Swahili, you may name the different languages.
Dumisani Mnisi of Master Artworks says such an opportunity has helped him gain a lot of fresh knowledge which will help him with new business ideas. He continues to say he has been able to make networks which will help him expand his business.
We did make a lot of sales in India basically, so yeah, abakhona vele ama sales lebe sikuphethe noma bekuncane but nje sakhona cishe ukuthengisa konke lebe sikuphethe. India on its own, it's a very big market kwayena, because it's just a matter of ukuthi niba nama products lamanengi, mhlambe mani yakhona niyovakashela khona mhlambe niyonda lama shows, otherwise kwabona nje babodvana, it's a very huge market ngalendlela bathenga ngayo.
The principal handicraft officer says because they usually take only samples with them, each handicraft business makes slightly over 3,000 emalangeni. For Nedbank Business Watch, Nelson Dlangamandla, Vuminkosi Nzinisa, Mbabane.
All right, that is how we end our business news segment. We have Sunil SB. After the break, we discuss the central bank's monthly statistical release. Welcome back to the program. You're still watching Nedbank Business Watch. We want to discuss the January-February statistical release by the Central Bank of Eswatini, which states that credit extended to the private sector stands at 21 billion emalangeni, showing an increase of 2.8% in the month-on-month and 12.1% year-on-year. Economist Analyst Via joins us now. He's in studio. He's going to help us understand the latest numbers on these statistical release. Sanele, good afternoon. Welcome to the program. We are seeing some interesting numbers here, but maybe if we may start with the credit and banking trends. They are saying that credit to private sector increased by 2.8%. This is month-on-month, 12.1 year-on-year. It reaches 21 billion emalangeni. The big question, what does this indicate about business confidence and household borrowing trends?
Thank you, Mr. Nxumalo, and good afternoon to the viewer. So this was actually an expected trend, given that we started seeing those interest rate decreases in, say, around August, September, and that has actually kept going, only to be held constant in December. So when that happens, Mr. Nxumalo, it does actually relieve a bit of pressure on both businesses and households alike, gives them a bit of liquidity to spend. That's why you're also seeing congruent trends in that broad money supply increase as we're seeing that happening. That shows that, we're seeing that private households are going back to their banks to borrow money, and as well as businesses going back to their banks to borrow money, actually to just ramp up their production, with the expectation that those interest rates are going to continue dipping well into the medium term.
Yeah, you're saying it was an expected, it was expected because interest rates decreased and it did, bring in a bit of liquidity. Just how much in practicality is that liquidity felt?
So those people that are actually, those that have loans with the banks, loans and obligations that are linked to prime.
Right.
They actually feel that. But if your loans and obligations are not linked to prime, then you're not going to feel that. So for businesses, SMEs, and quite a number of households, if you're using a bank financial institution for your obligations, then you did feel that that shift, the downward movements in those interest rates.
And how does that then, further affect banks, rather, with regards to, the domestic liquid assets, which you're referring to? How does this affect their ability to extend the credit to businesses and individuals?
So when that interest rate goes down, Mr. Nxumalo, we know that banks would love it when the interest rate is very high because it's when they make money. But at the same time, when that happens, it rations out people who can actually go to borrow because it becomes expensive to borrow on the side of business and also on the side of the individual. So an interest rate that is somewhat close to interest rate neutrality is the one that works best for businesses and both for the banks. But all in all, banks want to improve in their loan ledger. So what that does as well is it reduces the rate of non-performing loans because it does give people a bit of a breathing space, and people are going to have a bit of more money to spend, such that they do not have to then take that obligation. And it gives businesses a boost, and that's the money that businesses need to grow, and banks are willing to lend that money. So it's an issue of shifting from margins to volumes, Mr. Nxumalo. The lower the interest rates, the more the loans you can sell. The higher the interest rates, yes, you're making a bigger margin on your profits, but in terms of the volumes, they're not going to be that high.
So one may argue that it's still a win-win situation for the banks, really, whether the interest rates are low or they are high, even though they prefer that they may be high.
Yeah, no, it is a win-win because when you look at that money, broad money supply, that domestic liquid assets, so we can look at that, and it does tell us that banks have actually created more money. I mean, remember that it is banks that create money. The central bank only just prints it. So that jump signals that there's a lot of money that has been given out to the economy and must be paid back with interest, which is what the banks would then want to do. But what is quite interesting about this, Mr. Nxumalo, is it's an environment that is favorable to business, such that businesses are going to invest. And if you look further down in the report, you can see that there's also been an increase in the amount of loans that have been extended to the small and medium enterprise sector. So we're seeing that uptake in those loan guarantee schemes, and also that uptake in banks being willing to lend to SMEs, which is something that we've not seen much of in the past. It's only
So
just
this is not only good for business, I mean for people alone. It's also good for the economy at large, so to speak.
Exactly.
Okay, let's get into government finances and monetary policy. We are seeing a significant drop here with regards to net government balances. They fall significantly from 1.7 billion emalangeni to negative, what is that, to 86.7 million emalangeni. You know, what are the main reasons for this decline, and how might it impact fiscal policy?
So that is to be expected yet again when you look at the cycle of, those SACCO receipts. So those net balances tend to be affected by the fluctuations or the SACCO receipts when we actually do collect them. And, it does also signal the fact that in as much as we may have had that stabilization fund, we know that there was a time that some of it had to be used, but mostly it's due to those fluctuations in those SACCO receipts. And it's also it's also visible in terms of those gross official reserves. You can see that no, it did really dig deep into those official reserves, purely because we've seen those movements within the SACCO receipts.
Yeah, this is interesting. Discount rate remaining at 7%, prime lending rate standing at 10.50%. What credit demand increasing, and do you foresee any changes in the interest rate policy in the near future?
So what we would expect, we expected 2025 to really present a favorable year in terms of those interest rates. But with the Trump policy, the looming trade wars across the globe, then we are somehow in a catch-22 type of situation where we're not sure whether that's going to be inflationary or not, right? But we do expect that if the tariffs are not inflationary, if President Trump is actually going to hold back, because if you do notice right now, he makes the threats and then he holds back. So if he does hold back and inflation does not overheat like it did the previous years, we should expect that moving forward, the interest rate should decline. Monetary policy should continue, on that favorable stance. But if President Trump's movements would actually make it unfavorable, like we see, because if it does that, those tariffs and whatnot, it's going to be inflationary for the U.S. economy, and we know that once things are inflated in the U.S., that will likely reverberate and cut through the entire economy. So as it were, we are waiting to see what the policy stance will be coming out of the White House.
Right. So government finances and monetary policy is not the only section where we are seeing a drop. We also seeing a drop here with foreign reserves and exchange rate stability. Gross official reserves falling by 5.3% month on month, but growing by 36.1 year on year to 12.2 billion emalangeni. What are the factors contributing to this particular decline, and should businesses rather be concerned about forex availability?
So if you look at that and you notice that ever since the 20th of 5th of November, when the US had their elections, and then through to the 20th of January and to the current present moment, we moved from, that touch of that 17 emalangeni for $1 to that 18, closer to the 19 type of region per dollar. So that is why we need more of the local currency now to buy more of that foreign exchange reserve. So we do need quite a lot of it to utilize in the global markets. And also, it speaks to the issue of import cover, in terms of the import cover, how much we have in reserve to cover our imports. So ideally, we would like a figure around 3 months of import cover, but I think the ideal is 4 months. But with 3 months, we are more or less quite relatively well, and it protects our peg with the South African rand through the CMA. So that's why we kind of always need to have that 3 months of import cover to facilitate trade.
But it dropped. It dropped to, 2.8 months from 3 months. How does that then affect trade?
It would affect trade if it were to stay at that level, say for the next 3 months, because then would have
That's not going to be
depleted.
the case.
Yeah,
when you-
because we do know that there's SACCO receipts coming in, you know. SACCO receipts are usually that one factor that really boosts our forex type of reserves. So we do know that they fluctuate with that cycle. That's why that peg has always been maintained.
But do we have another recommendation to strengthen our reserves besides just, this over-reliance on SACCO receipts?
It's simple. You need to sell more to the outside world and sell high value commodities, because when they pay you, they'll pay you in that foreign exchange, which can go into the central bank. So we
Donald
just
Trump
need
approach.
to.
Okay,
Yeah.
let's talk business and sectoral growth. I hope we still have enough time to get into this particular segment. It grew by 5.4% month on month. Manufacturing, transport, agriculture, of course, leading that front. Are there signs of an economic rebound here, or is this growth concentrated in specific sectors?
If you look at the growth, it is actually showing that the economy is actually going to rebound, more especially through manufacturing and then agriculture. But overall, it's a rebounding economy, and we did expect that with that cheap money type of lending environment. So we did expect to see a bit of that shift towards that growth trajectory and coming through those businesses that actually that had more access to that money. So as we move more towards interest rate neutrality back to the 5 type of region, we should expect to see more growth coming in through these sectors as we get to that rate, which would just be enough to keep business going and to keep the banks going.
Yeah, SMEs. We love talking about SMEs on this show. I think we have highlighted enough how important they are to pretty much any economy. The lending, they increased. And, credit to real estate, on the other hand, fell by 0.4%. Does this speak to a cooling off when it comes to property market, or does it affect, indeed, financial stability?
I think what we need to be cognizant of is the fact that, the cost of living is still high.
Right.
So people now have to somehow balance out between buying the house and also just being able to survive.
Right.
And what you then usually see is, real estate does not necessarily move at the same time with the current interest rates, because that's a longer term decision. That's a 25-year commitment. If you go there and you get that bond, so you kind of expect the interest rate to be at that level, quite close to interest rate neutrality, around that 5% for you to come into that market. And also what we are noticing across the board is the shift towards building on Swazi Nation land through keep using your pension as that leverage, or as that type of as that collateral. We're seeing that move as well. So it might then appear that there is no movement within the real estate. But what we need to be looking at there is the new housing starts, like how many houses have been built. But unfortunately, when we are looking into that type of data, it's only just going to show you how many houses have been built on Eswatini Nation land, on titled land, but not on Eswatini Nation land. So
that's not comprehensive enough.
Yeah, it's not comprehensive enough. So hence, I do not think that this is something that we should be alarmed by at this current point. But there is that rebalancing, people going to these areas in the urban periphery and building their nice houses there and staying there. So obviously, that will have an impact on the what you call the modern type of housing situation.
The property market there. Sanele, thank you so much for your time. We thank you for your punchy insights as always. We do have Toba Kametsa. He's the Treasury Sales Manager at Nedbank Eswatini. We are discussing all things Forex, payment systems, and new innovation within their Money Nedbank Africa app. Don't go anywhere. Welcome back. You're still watching NetBank Business Watch. Today is the 12th of March, and we get into this particular interesting segment where we are talking banking made easy by NetBank. But today in particular, we're talking about foreign exchange payments made easy. Toba Kametz, the Treasury Sales Manager, is going to explain to us what it is really that they have done to make sure that foreign exchange payments are indeed easy for you as the banker. How do you access the new feature? That is a question. The exchange control, as well as how long it takes really for funds to be transferred to the beneficiary. Toba is going to make sense of it all. Good afternoon. Welcome to the program, Toba. The biggest conversation right now with bankers is convenience. Not only with banking, with everything really. We want convenience. We feel like our dignity is being stripped away when we have to queue and fill out forms. Talk to me about this new development with NetBank, new international payments feature on online banking. What is this?
Thank you, Swiso, and good afternoon to the viewers as well. You are right. We as a bank are always looking at convenient ways to bring banking closer to our clients. We are in a digital era now where customers are used to doing things on the go. So banking should not be an exception as well. So NetBank has heard its clients, and we are introducing foreign exchange payments on our digital platforms. So what this means is that our clients can now make payments from their NetBank Money Africa app or from their online banking.
Okay, so what is it that is different? Obviously you did have this feature before, but it wasn't online, so to speak. Let's make the contrast now. How is it different?
Yes, so it's definitely not a new solution in that we, as a bank, we have been able to make foreign exchange payments for our clients. But the process was more manual in that our clients were filling in forms as well as writing instructions when making these payments to their different beneficiaries across the world. But now what the bank has done is to allow these payments to be done on the app. So that means if I am paying maybe a supplier in US dollars, say in China, I can go into my online banking and capture a USD payment to that supplier. It is not a straight through process, so that payment is not gone per se in that it's already gone out of NetBank. But when you submit it as a client, it is received by the bank, and the due processes that we were doing prior to this, which we'll touch on, including exchange control, vetting, and all of that, those are still going to happen in the background. But this gives you the convenience to capture your payment and authorize it on our digital platforms.
Have you scrapped off the initial way of filling in forms entirely? Because, I'm well aware, as people who work in organizations, and I'm sure you'll agree with me, there are those people who still prefer, the old filing system. People don't really like to move with it. Not everyone likes to move with the times.
Yes.
Some people still prefer, the old way. Do you still have that feature?
Definitely, definitely we do have. So clients can still submit those forms and letters to the bank, but we are encouraging our clients to take advantage of this new convenience. But should the need, say for example, you don't have access at the time and you need to do a payment, we are still able to process those payments for our clients using the forms or the instruction letters.
Okay. What are some of the bank's traded currencies?
All right, so our clients can make payments in the major currencies. So it's the US dollar, the euro, as well as the pound. They can also make payments in the Botswana pula, as well as rands as well. So you can make your payments in rands. We know that in the CMA we pay each other exclusively in rands, but you can also send them to anywhere else in the world.
Okay, let's talk about the exchange control. You have, slightly alluded to, some sort of a vetting process that has to be done.
Yes. So as a bank, we are regulated by the central bank, and the central bank is the custodian of the exchange control regulations of the country. So each payment differs. So the reason for payment A is going to be different from the reason for payment B. A certain person may be paying for imports, someone else is paying for studies, and things like that. So there are different prescriptions for each of those payments. So, for example, the base most of the time would be an invoice. It's to say you are paying for an import, you're importing a car, for example, then the base as a supporting document would be an invoice. Right. So then exchange control regulations then go into detail to say what kind of a car. Is it a used car? Is it a new car? If it's a used car, then there are regulations around you should submit maybe an import permit. So I'm saying that to say that different payments require different supporting documentations, but all in all, Nedbank is always adhering to the exchange control regulations in terms of those requirements, and we do advise our clients of such to say, if you're paying for a service, this is what you're supposed to provide to us. If you are repaying a loan, then these are the documents that you're supposed to provide to the bank. But ultimately, once the payment is received by the bank, so once it is fully captured and authorized from the client's side, it then goes through that process. And if it passes that process, if all the supporting documents are submitted and are sufficient, then the payment is then released now and paid off to the beneficiary bank. So it is only then that it leaves Nedbank.
Okay. I think we also do want to emphasize something that you've already said, that it is added into the already existing pay feature. Whether you're an individual or you're a business, there's no really a need to re-register. You can simply use the online as well as the app platforms to process these payments. Does that apply? I'm really concerned about the businesses because, like you are saying, there's always different requirements for whatever service it is that you are trying to, push through. The existing permissions and roles for businesses. How is the approach there?
Okay, so so this, in as much as this is a new feature on our online banking or on our digital platforms, it is added to the existing pay options, as you have said. You have single payments, you've got multiple payments, and all of that, tax payments. We've now added this fifth or sixth feature for international payments.
Right.
So you do not need to register separately for this international payment solution. It is added to your existing profile. And also for businesses, like you've said, users are assigned rights and permissions and limits. So there is no need to assign new limits or permissions for the Forex payments.
Yeah.
So the existing limits and roles. So if I am, for example, authorized to capture payments on behalf of company ABC, then even if it's a Forex payment now, I'll still have the same responsibility or the same role on the platform. And as well, if I have a limit of 1 million malangeni per day, for example, then if I capture a $20,000 payment and the equivalent of that, say, is 350,000 malangeni, then that eats into my limit for the day. That means my remaining limit for other payments that I can do on the platform that day is then the 1 million minus what I've just paid. So the existing limits, roles, and permissions are not impacted. The same will still apply.
You did mention major currencies as some of the currencies that the banks traded currencies within this feature. The US dollar, the euro. I want to believe those are categorized under a different time zone. Maybe the others do fall under Central African time. Does this really have an effect to how long the funds take to be transferred to the beneficiary? I suppose that would be the case.
It does have an effect, but there is a standard when it comes to SWIFT payments, because all the payments that our clients will be processing or are processing on the feature, on this new feature on online banking, go through the SWIFT rail, which is one of the most secure ways of sending cross-border funds. So the standard day is 2 working days ordinarily, but as you've said, different time zones. Maybe you're sending to a Japan who is 7-8 hours ahead,
Yeah.
or you are sending to the US who is 7 hours behind. So there is that a delay. To say, if maybe I'm sending to the US,
Right.
I'm sending now. They are going to open at 2, and maybe my funds will be received same day because they are, yet to open for the day. But then you're talking of Australia, on the other hand, they are almost at the end of their day, which means the funds will be received the next business day. Also to that, there are other factors along the way, because payments go through payment screening, and also the beneficiary banks as well have their own requirements when it comes to incoming funds on their side. But to answer your question, the standard is 2 working days. You may receive it before that, you may receive it a bit after that, depending on all those variables that we've just mentioned.
Okay. For more information, how do clients and potential clients get to contact the Treasury Department?
All right, so we have our contact details, our email, which is treasuryeswatini@nedbank.co.sz, where our clients can email us. But we love to chat to our clients, a team of vibrant dealers. Our contacts are 3278 1273. You can also call 1249 as well, and we'll be happy to take out
3278 1249 also.
Yes,
Okay.
1249. So we'd be happy to chat to our clients about these developments within our foreign exchange space. We're quite excited about it, so we definitely are eager to engage and hear what our clients' feedback is on this.
Yeah, and just a reminder, you should know by now, Nedbank Eswatini on Facebook, on X, as well as on LinkedIn at Nedbank Eswatini across those 3 platforms. This has been Tobaka Metse, Treasury Sales Manager at Nedbank Eswatini. We have been talking all things foreign exchange payments made easy. This new development, you can now make your foreign exchange payments online as well as through their Nedbank Africa Money app. Let's go for a net break. We'll be back shortly. Welcome back to the program. Some businesses in the beef industry have said their demand for cattle are not met by local farmers. Now, this has also resulted in them slaughtering less, and this therefore affects business output. Our business journalist, Nelson Ndlangamandla, discusses efforts as well as the initiatives that will be used to ensure that the beef industry remains sustainable in the country, with the PS from the Ministry of Agriculture, Sydney Simelane.
Good afternoon, PS. Welcome to Nedbank Business Watch. What has brought us here today is the concern from the beef industry, especially the big companies. They are saying that their demand for cattle is not met. Before we get to what you are doing as a ministry to ensure that Eswatini has enough cattle, I want you to first start talking to us about this industry. How big is this industry in Eswatini?
What I can tell you is that our export, we are not able to meet our quota for the export market. We realize that they actually need more beef from the farmers to be able to meet the quota. So we find it very important that we provide a situation whereby the farmers will be in a position to get the cattle. We have established a very strong program of feedlots in the country, and when we are looking at the trend, we realize that the number of feedlots are actually going down, or rather active feedlots are actually going down. And the main reason for this is that they don't have enough feeder stock, which means that these are the cattle that they need to put in their feedlots and feed over a certain period of time and then release them to the market. Now, the question is, as government, what are we doing about that?
What is it that you are doing as a ministry to ensure that Eswatini has enough cattle, PS?
There's a number of activities that we are trying to do to make sure that this happens, or rather farmers get the support. There has been an outbreak of foot and mouth disease in neighboring countries, and as a result we found that we are not able to import from these member states. We have improved our relations with South Africa to the extent that they have been able to tell us that they are now closely monitoring the situation, to the extent that they can tell us which specific provinces in South Africa we can get cattle from. At the moment, they've given us a list of 4 provinces that include Mpumalanga and Gauteng. I think the other one is Northwest. But this simply means that we have to try and carry out these activities quickly, because this process requires that we identify the cattle in South Africa in this free zone, and then from there we put them in a quarantine over a certain period of time. Then we export them to, or rather import them to Eswatini, and then here they will be also kept in a quarantine for some time, and then from there they will be released to the farmers. We are realizing that the national herd is quite low, so it is important now that we can't wait for the number of cattle in the country to grow naturally, but we need to just boost the country herd by importing these cattle. So we are working on that process. We have identified a number of farms in South Africa from which we'll be importing these cattle. And just to add to that, we are also going to buy dairy cattle as well.
You have mentioned the issue of foot and mouth disease, PS, which is a very, very serious issue. What measures does the ministry continue to put in place to ensure that Eswatini does not contract this disease, especially the cattle in the country?
Thank you. The foot and mouth disease is a big threat to us. We know its impact, and at the moment we want to say that as a country we are very happy that we are considered to be free from that disease. So to keep our positive status and make sure that as a country there is no foot and mouth disease, we have surveillance teams from the Director of Veterinary and Livestock Services that are going around the country to make sure that they test on a regular basis and find out if our cattle are still free from FMD. Now, these surveillance teams are very, very cautious, because as soon as they suspect that there's a problem, they will then close off the dipping areas in those communities where they seem to be suspected of FMD. And then they close them off so that there is no cattle going in or coming out. That is a very, very important process, because if it turns out that there is FMD while they are carrying out the test, then we need to know that we have contained it within that area. The other important function that the Office of the Director of Veterinary and Livestock Services is looking at, it is the protection of livestock that can come from neighboring countries. The issue of transboundary disease control is of critical importance to us. So as a result, we've identified areas around the country that are prone to be affected, or maybe that can cause contamination with FMD. So we monitor the international boundary and make sure that it is somehow impeccable, just to make sure that animals cannot cross from South Africa to Eswatini or from Eswatini to South Africa. Where we feel there's a even bigger concern on the foot and mouth disease, we then introduce a cordon fence. This cordon fence is 100 meters inside the international boundary. So that is where we feel there's a bigger threat. As we speak right now in the southern part of the country, Mkwakweni, there has been suspicions that in South Africa, actually we've been informed, our counterparts in South Africa, that they have found out that there might be FMD contamination in that part of South Africa. So the moment we were told that, we sent our doctors to make sure that we have strict controls in the area. And those dipping areas there have now been informed that their animals will not be able to move within the area or to other areas, simply because this is a way of controlling the spread of the disease.
How many cattle does Eswatini currently have, PS? We know that there has been a lot of deaths due to droughts before.
The rough estimate on the number of cattle that we have in the country is 500,000, which is 500,000. If you recall, there was once a time in the past where we had in excess of 1 million cattle in the country. So there's a number of factors that have contributed to that. You will recall that we had a drought in 2016, 2017, and over 80,000 cattle died at that time. Now, this is a problem because it is affecting the mindset of the farmers. Some people do give up completely and say, you know, because of the drought, I was not able to recover, so I'm not going to bother with growing livestock anymore. So these are challenges that for us as Minister of Agriculture we need to deal with. We need to provide services to these communities and make sure that we encourage them to have as many cattle as possible. But from the figures, clearly we need a boost on the national herd. So it is important for us to import once or twice from other countries, and then thereafter natural progression will take its place.
It's been a pleasure having you on the program, PS. We can't wait for all these initiatives that you have highlighted to start fully benefiting the farmers. There is also something that you have said before as a ministry, that you will buy cattle from South Africa and sell them at a reasonable cost to farmers. Thank you for being with us on Nedbank Business Watch.
The initiatives by the Ministry of Agriculture to boost, the beef industry. Let's talk to Nozibusiso Dembe, the Treasury dealer from Nedbank Eswatini. We are discussing how the markets are moving and what they mean with the way that they are moving today. All right, the markets are moving, the numbers are shifting, and your investments are reacting. To break it all down, today's indices is going to be Nozipho Dembe, what they mean for your money. Let's welcome her. She's the treasury dealer from Nedbank Eswatini. Good afternoon to you, and welcome to the show. Loving the new hairdo. This wasn't the case last week.
It wasn't.
Look, we are seeing the Lilangeni sliding. What is the story here? It's taking a hit down over 1%. This is against the dollar, the pound, as well as the euro. What is driving this dip?
Yeah, so we've observed this since Friday last week.
Yeah.
The Lilangeni against the US dollar against the EZL is currently trading at 18.3798. The pound against the EZL trading at 23.7646, and the euro against the EZL trading at 20.0613.
Yeah.
And we've seen this since Friday. So on Friday, Trump renewed his criticism of South Africa's land policies, indicating that South Africa is confiscating land from farm owners.
1 second. I really apologize for holding your tongue there. We have to go for a net break. We have to fix a few issues with her microphone.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back. Let's perhaps start at an apology for the technical issues that we had to attend to really quickly. Our apologies are profound. Nozibosiso Dembe, the treasury dealer from Nedbank Eswatini, was decoding the currencies today. She was speaking on the Lilangeni taking a hit down over 1%. You were explaining, some of the developments happening in South Africa with the land issues.
Yes. So Trump made some remarks about criticizing the land policies in South Africa. So that's when it started to decline. Yeah. But even today, even when we opened on Monday, it was continuing to be weak because of the jitters around the budget speech, which was postponed to today, which is currently happening actually as we speak. And the expectation by the market was that there was going to be an amendment in the VAT increase that was expected from 2%. And indeed, people are probably watching now the budget speech, and VAT has been increased only by 0.5% to 15.5% instead.
Okay. Let's talk about the cost of a weaker currency, winners and losers, so to speak. You know, great news for exporters, of course, a headache for importers, though. You know, should businesses be bracing for rising costs here?
Honestly, it's difficult to tell with markets because right now we might be suffering because of the budget speech, but tomorrow something else could happen. But right now, the rand has shown no reaction to the budget speech. It's currently still trading at around 18.3637, which it's been the whole day.
Okay, gold continues to be charming. You know, it's glittering. Safe haven or just hype. You know, I'm seeing here it's inching up, holding steady at just 2.9 per ounce. That is in US dollars. Is this a classic fight for safety, or are there deeper forces at play here?
So obviously gold is a safe haven, as you've indicated, but right now the market is sort of bracing itself for US inflation figures, which are going to be printed this afternoon. So gold is currently trading at $2,915.3 per ounce, and we also have Brent crude trading at $72.65 per barrel. On the Brent crude side, we've seen some gains due to US cutting its forecast for supply of Brent crude, because they are also seeing similar moves from market watchers.
Are we finding a balance here? Because, you know, just last week we received some really heartbreaking news just locally with regards to Brent crude.
So I wouldn't say we're finding a balance, because there's always some kind of movement. Just last week, in fact, we were saying the price of Brent crude was steadying because from April onwards, the expectation was that there'd be more supply. But now there's a change.
Surprise.
Exactly.
Yeah. Anyway, you know, red across the boards. What's spooking investors here? Wall Street to London, Johannesburg markets are flashing red. S&P 500 down 0.76%. FTSE sliding 1.21%. And even the JSE All Share Index is in the red. What's got investors running scared?
So with all of these indices, what's affecting them the most is the US's tariff policies. So you'll see across even other indices that we're not tracking on this program, they are being affected by that. The S&P 500 has suffered significant losses for some time, and in fact, it received its steepest decrease yesterday for the first time since December last year. So it's really struggling. And another interesting thing to see with the S&P 500 is that these losses are also affecting the Magnificent Seven, which is basically the 7 mega cap tech companies who really do well in the market. Tesla has fallen by more than 15%. Nvidia
will bounce back. He said it's temporary, but you know, we love seeing an optimistic chief executive. But
absolutely right. Optimism is always good. Nvidia has also decreased by more than 5%. Apple has decreased by more than 4.8%. So we're seeing these decreases in the Magnificent Seven, which just indicates how hectic what is happening in the market is.
Yeah, it's quite interesting indeed. But you know, with the JSE, are we seeing a silver lining here, perhaps, because it is down, but only 0.23% compared to the other deeper losses that we have just, you know, looked at? Is this a sign of strength? What is it indicating, really?
I mean, it's obviously good for South African companies. They're not losing as quickly as companies in other countries. But with the FTSE, you will see that it's losing quite significantly. And in fact, it also reached a more than 5-week low, mainly because of global equity sell-offs, which are surrounded by the fears of an economic crisis.
So perhaps let's end at a bigger picture here. Your takeaway from everything that we have, you know, just discussed. Should investors, rather, I'm not an investor like that yet, should they be expecting a turbulence? Should they be buckling up for a turbulence, so to speak? Or, you know, there's light at the end of the tunnel here?
You know what? I'd like to believe that there's light at the end of the tunnel. It has been a turbulent couple of weeks. I think since President Donald Trump took office, it's been turbulence. But even he indicated in his speech in Congress that we just have to brace ourselves, and eventually it'll all work out. So I'd like to believe that there'll be.
So the takeaway from Zibo is indeed a glass half full perspective, especially for investors. It's pretty much for us as well, because we are affected by some of these numbers. I mean, Brent crude numbers that she has, rightfully decoded today. So it's a glass half full perspective as the days go by. Thank you so much for staying with us on the program. This has been Nedbank Business Watch, our edition today on the 12th of March. We'll see you again next week, Wednesday. Bye-bye.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.